Hey Daniel, how's it going? This is Ryan with TrendLizard.com late on a Friday evening. Thank you for sending me the three tickers that you sent me to analyze for you using Elliott Wave, as we do here at TrendLizard.com. I'm going to go ahead and take a look for you at Amazon, DraftKings, and Visa. All three hot stocks, all very interesting and all definitely worth taking a look at using the Elliott Wave theory. So we're going to go down the list here. First up is Amazon. Super interesting stock. Some of you might have heard of it before. I'm starting here with what is a linear scale chart. So basically, every box is 200 points as opposed to an equal percentage amount. And I do this just to show you what a moonshot this guy is over the last 5 years. I mean, it's started out. It's been great every step of the way, but really, what's happened over the last 5 years? And most specifically, what's happened in 2020. I mean, this thing has gone absolutely crazy, doubling its value over the course of about 5 months. Absolute stud. It's a beautiful thing. Enough oogling at this chart. Let's go ahead and zoom in and take a look at what's going on. So now I've gone back to the normal log scale that we use, dating back to 1997, which is when Amazon was incepted. Trading for just a couple bucks would have been a decent buy back then. Obviously, things have changed since then. But here's our take on the long-term time frame. It started out with a very nice trendy up move into the 1999 high. Had a very large pullback at that point. That would have been a great buying opportunity as well. But since then, it has embarked on a very large trendy advance that still appears to be in play some 19 years later. And this is my take. And I've actually analyzed Amazon in 2018. One of the videos I posted on my YouTube channel. And our count has held up very well, and this is still very similar to what we posted over 2 years ago. So it looks like a first wave up here into the 2007 financial crisis high, a very large pullback that is now dwarfed by the size of the advance, but still a very large second wave pullback here. And then you kind of got things really rolling off the 2008 high into that 2018 high for a big third wave up. Some back and forth action, which I have as one fourth wave, and now a large fifth wave advance that is taking place in 2020. So that's what we're looking at on a long-term time frame. We have to keep in mind that it appears that a fifth wave advance is in play off of that 2001 low. When this upleg completes, this big 5-wave advance here, you're talking about a pretty substantial high, and you're talking about a pretty substantial corrective pullback that should take place. That is for a future discussion. Right now, our focus is on getting the most out of this fifth wave as we can, but I want you to keep that perspective in mind, is that this does look like it's in a terminal wave on a super long time frame. It may take a few years, hard to say exactly. The trend is still up, but it does appear to be in a terminal fifth wave. So let's go ahead and zoom in on Amazon. This focuses more on that advance off the 2009 low, and I just wanted to show you a little more detail in what's going on. This doesn't show you all of the wave 1 black, but it gives you what you need. But again, the real focus is on what's happened off that 2008 low. Every up leg has been a very nice 5-wave advance. You get yourself a nice 1, 2, 3, 4, 5 in blue for wave 3. And then you have this pullback in 2018, a little bit of sideways action in 2019, the funky COVID action in early 2020, and then the moonshot from there. So let's continue to drive in. I just want to take a little bit closer look at this action off of that 2018 high and why I consider this to be a fourth wave correction. Here you go. Everything that happened off the late 2018 low into that early 2020 high is a clear 3-wave move. That tells me that it was still in this counter trend pullback, and this is what we're finding all across the charts. Normally it's a pretty funky move, but what we're finding is that one way or the other, it was a larger counter trend pullback from the 2018 high into the 2020 low. So in this case, it's kind of a running flat correction. Wave C ended probably higher than it should have in normal conditions, but so it is, right? Bottom line, this looks like a very important low to a very large multi-month, even not multi-year, but about a year and a half long counter trend pullback. Since then, things have obviously turned quite green for Amazon, as it has doubled its price over the last handful of months. It appears to me to be in the third wave, blue, of this advance that began in 2020. So it's giving us an extended third wave advance to the upside, currently in what appears to be the fifth wave of the third wave advance. So internally a fifth wave within a larger third wave advance. So we're going to continue to drive in and take a look here. This is a closer look at that advance off of the 2020 low. It shows a little bit more detail why I've labeled it as I have, and consider it an extended third wave, which is the most common wave to extend in the first place. But where it puts us again is towards the end of a third wave advance. We should get some more strength here. There was a low to a small degree low that happened in July, and then we have an up leg that has set new highs in August that does not appear complete, and higher prices should be expected. On this time frame, the closest level that we can use that has any significance whatsoever is 2300. That is a gazillion miles away. That's obviously pointless for us, but at the end of the day, it's the only level that has any significance on this time frame. And that's what's so tricky about the current market, right? Is things have just run so far, so fast without ever pulling back, that you don't really have close stop levels. So if you want to partake in this beautiful, amazing, one-directional market, there's risk because you don't have a super close stop level, at least not one that's significant or meaningful to the Elliott wave pattern. Now, you can buy these things, but you just basically have to come to grips with the fact that you're not going to have that meaningful stop level. More than likely, what you're going to want to do is own it until there's some feeling of a change. And I know that's an awful thing to say as a technical analyst. You're not looking for feelings, but it's pretty clear that this market only wants to go up. The second that changes and you feel this market becoming more heavy and not looking to turn higher at every opportunity, that's kind of your emotional stop level, if you will. So sorry about that little diatribe here. Let's continue on. The advance off March's low, again, looks to be in the third wave. We expect higher prices, and we can drill in a little bit closer to give you a little bit more information here. So here is what's been going on since that pullback in July. This is why I think this up move is not complete yet. We expect higher prices. Again, nothing's really pulling back. It makes it very hard to be bearish or to expect anything larger to the downside. Bottom line, Amazon should be expected to head higher as long as it's trading above 32.15 on a very short-term time frame. That's as close as we can do. But on any longer time frame, this up move appears incomplete, and higher prices have to be expected within this fifth wave advance in 2020. So if I was trading it, I would absolutely continue to own it. I do own it, and I will continue to own it as it trucks higher. As soon as it's clear that this up leg in 2020 is over, once you get a clear five-wave move to the upside and you start seeing a larger pullback, it's time to go. I mean, if we step back out, again, we're talking about the possibility of a very large completed five-wave advance. It's possible that it won't be the high, and maybe this will just be wave one of a larger fifth wave advance. We don't know. All I know is that when this up leg completes in 2020, you're going to get a substantial counter trend pullback at the least to correct this up leg before the next buying opportunity begins. So not to make it confusing, but bottom line, you want to be bullish on this guy. Once we get a completed five-wave advance off of the 2020 low, it's time to go. I'm sorry, no matter what time frame you're on, I just think it's time to take profits at that point, allow a larger pullback to play out, get a better grip on exactly if we're still in that growing fifth wave advance or if a massive five-wave advance has completed. So there is Amazon for you. We are now going to move on to DraftKings, DKNG. And this is it. This guy has a little bit less track record than the previous stock there with Amazon. This guy was incepted back in 2019, spent most of the rest of that year trading sideways, not doing much, but then things got pretty interesting starting in 2020. Had a very nice advance early on, gave back most of it in March, like a lot of things did, and then embarked on a very sizable advance into the June high. Since then, it's been pulling back. So basically what's happened off of June's high looks to me to be a fourth wave pullback. Again, this is the first, second wave, third wave, and now you have this pullback. The question we have to ask ourselves is that fourth wave over? Did it complete in July and now we've resumed the uptrend? or are we going to get a larger fourth wave pullback before the advance begins? Either way, we're bullish. Either way, we believe this pullback in off the 2020 high to be a counter trend move that is going to continue higher. But timing is a very important factor here because this pullback could head all the way down to about 23 before it completes. Probably won't, but it has the potential to, so it's not something we would want to buy if a larger pullback is indicated. So enough talking about it. Let's go ahead and zoom in a little bit further. This takes a closer look at the advance, basically that big third wave advance that was playing out. A very nice trendy move. There's no doubt that this is a trendy move given its size and pace. It's just a matter of how you want to label it. It's fairly obvious. It started in early April, ended in June. Here's how I label it. It's a 5-wave move. Now, when we look at the pullback off of June's high, the first thing that I notice is the pullback, that initial down leg. Looks like a 3-wave move to me, okay? And the other part that kind of confirms my thinking that this is a counter trend pullback is that it did move briefly above a 61.8% retracement of that down move in June and July. Both things tell me, excuse me, to consider this a counter trend move, right? So it's just a matter of whether it's over or not. So let's keep drilling in, see what we can figure out. Here's the first possibility, okay? Let's say that 3-wave move completed in July and the uptrend has resumed. This is what it would look like. You'd have a first wave up here. That was a pretty nice trendy move. That makes sense. A second wave pullback. This does look like a counter trend move. And now prices turned higher from here. This is where it gets a little trickier. If we're trying to call this the resumption of the uptrend, this up move in August leaves a lot to be desired. It doesn't look trendy. There's overlap. You have to get creative with the labeling. Bottom line is this: if DraftKings moves below 34.25 at any point, there's no way that I can believe that this is the resumption of the uptrend off of July's low. If it moves below 34.25, it would be something more like, something more like this. You get that move below 34.25. It leaves you with a 3-wave advance off of July's low, which would confirm that DraftKings is still in the counter trend pullback that began back in June. So that's the deal. 34.25 is the level that we're looking at. I expect it to give. I expect a larger pullback to play out, because if we do look at the tricky way to try to label this up action in August to call it trendy, seems like we're trying pretty hard. This doesn't seem like a real fair representation of what's actually happening here. This feels like we're trying to call it a trendy move. You have the first wave up, a second wave down, and then you have a smaller degree first wave, and then a second wave that retraced more than 61.8%. No bueno for me. I just don't like it. I mean, I I think it's much more likely that what we're looking at is a larger counter trend pullback. So if we step out again, out to this level, it looks to me like we have a larger fourth wave pullback that's going to turn back down, confirmed by a move below 34.25. And once we get that C wave down, somewhere ideally below July's low, somewhere in this area, you get that nice 3-wave pullback, and then you start seeing some strength. That's your buying opportunity. That's when I would be looking to buy in on DraftKings. Not yet. I mean, if things just completely turn around and this up move in August becomes much more purposeful and clean and clearly has higher levels in mind, that becomes a different story. It's not what we expect at this time. It looks like we'll get a larger pullback. So there is DraftKings. Last one for you. We are going to look at Visa. Here it is. So this guy was incepted, at least our data, back in 2008. And after a small blip during the financial crisis, of course it was cut in half at that time, but it looks like a small blip, pull back into the 2009 low. It has been on an unadulterated tear to the upside for the last 11 years. Beautiful move, still going, set a new all-time high, I think, today. So obviously the trend is still up. The way I have it labeled is as a first and second wave in 2009 and 10, and the pullback into 2011's low, and since then has just been in one massive third wave advance that may be getting closer to an end. We're seeing that as a trend across several stocks. It could be nearing an end, but at the end of the day, it's not over yet. So let's go ahead and zoom in a little bit here. This just kind of takes a chunk out of this more recent action here to show you why we've labeled it as we have. You can see this action is trendy to the upside in 2019. Then you get this massive pullback like everything did in February and early March. But it still looks like a 3-wave move. And we know this is a counter trend move because it's been completely retraced by the recovery that has played out off of March's low. set a new high, like I said. So no matter how you want to label this down move, it's a counter trend move. It's been retraced. There's no debating it at this point. So the only thing that matters at this point is what's happening off the 2020 low, and should we expect it to continue. So let's go ahead and zoom in, and here is what I am finding. This is the advance off March's low. It appears to be a 5-wave advance that is currently in its 5th wave. Now overall, we're still bullish on Visa, but I do believe that it is probably in a terminal wave, with that terminal ending wave beginning in August. So we have a first and a second wave, kind of a funky second wave, kind of a running second wave flat correction, a larger third wave advance into June's high, a flat correction in June and July, and then in August we have the kickoff in a 5th wave advance. This guy is going to continue to look bullish and should be expected to continue higher as long as it's trading above 200. Again, we come into that same problem. We don't have super close stops. We just don't. This market's gone crazy. I mean, it goes from 190 to 215. That's a very big move for just a few weeks. So it leaves us with less than desirable stop levels. In this case, it's 200. Visa will look bullish and appear to still be on the rise as long as it's trading above 200. In reality, if you get any real notable weakness, which is something that this market is just not, we've not seen in this market, it should be a warning sign that maybe a high is in and it's time to bail. So let's go ahead and zoom in a little bit. This is that advance in August. This is how we're looking at it. Again, first wave up, second wave down, and then you get this third wave up here. If you want to use a very short-term time frame key level, 203.50, a move below that level would be an early clue that 200 was going to give, and that it would be time to bail. So bottom line, we're expecting Visa to continue higher in this 5th wave advance that began at the start of August. But once this up leg completes, you have to anticipate a larger counter trend pullback. At that point, we're going to be looking for something between a 38.2% or 61.8% retracement of this big 5-wave advance that began in March. And then on a larger time frame, we want to wait for that correction, make sure that we're going to get a larger 5th wave advance off of the 2020 low. But for now, you can be bullish. Expect that 5th wave to continue. It looks like there's a little more work to do before it's done. But once you see some notable weakness in this area, I think you'd have to take it seriously, because it would look like this advance off the 2020 low, at least this 5-wave portion of it, has completed, and a much larger multi-month move correction has begun. So that's what we're looking at, Daniel. I hope that's helpful. Let me know if you have any questions. Otherwise, if you aren't a member at TrendLizard.com, anybody else who's watching this video, come visit us. We rock this stuff out every day, and it's a fun market. So come see you soon. Have a great night. We'll talk to you soon. Take care.